Hello everyone, welcome back to Unday Radar Talks. MicroCloud Hologram stock fell 9% on Friday. The stock has fallen for 4 consecutive trading days and the current price is below the 5-day moving average. The important thing is that it is getting further and further away from the 38 to 42 cents area, which seems to be a bad situation. This indicates that the rebound of the stock from August 29th to 30th failed. The shorts have won again, and I suspect that it is not a real rebound, but a strategy of capital taking the opportunity to cash out at a high level. We can see that the 69 cents level is out of reach for the current position, and there are a lot of transactions distributed between 69 cents and 42 cents. These locked funds will undoubtedly form a certain resistance to the rebound of the stock price. However, the key battlefield between 38 cents and 42 cents is the key battlefield for the bulls and bears. However, the current outcome is determined, and the shorts have won again, so the stock price continues to fall. But the question is whether the stock price can find a foothold at the 29 cents level and launch a counterattack again. I think there is little hope because we have not seen a large amount of capital entering the market to take over the chips. Let's take a look at the 15-minute chart of the stock. We can see that the stock had 3 waves of price increases from August 29th to September 3rd, accompanied by large trading volumes. However, the stock price did not gain a foothold between 42 cents and 38 cents, and the stock price continued to fall in the following 3 trading days. As mentioned earlier, if big funds have already exited the market when the stock price was high, then the situation will become worse. What is even more pessimistic is that the stock's trading volume did not increase significantly from September 4th to 6th, and there were no large orders when the stock price was low, which means that there was no large amount of funds entering the market to take over the chips at the level of 29 cents. Let's take a look at the capital flow data of the stock. We see that the stock's capital was in a net outflow state from September 3rd to 6th, which is consistent with the performance of the stock price. But the problem is that the capital flow data for these 4 trading days has not been abnormally amplified, which can also be seen from the performance of its trading volume, which reflects that there is not much long capital flowing into the stock during this period, but capital continues to flow out of the market. Let's take a look at the market position distribution data of the stock. We can see that the stock has a large number of positions distributed between 38 cents and 42 cents, and this area is more than 20% away from the current price, which means that the stock price may have no ability to return to this area, at least I think it will be in the short term. As for the 29 cents level, as mentioned earlier, I have not seen a large amount of capital entering the market to take over the chips. In addition, there were not many transactions at the same position before the stock surged. Now the stock price has fallen back to this position again, but it is difficult to get strong support at this position. In fact, the stock has already shown that the surge has ended after it fell below the 5-day moving average. If the bulls try to continue the short squeeze, it will face greater resistance, so it is more reasonable for the stock price to continue to adjust downward. As for the target price, I set it at 16 cents. Okay guys, that's my price prediction for MicroCloud Hologram stock. Thank you for watching. If you like my analysis, please click the subscribe button and give a thumbs up. I will bring you more latest price predictions for popular stocks in the future. See you in the next video.